Good afternoon, ladies and gentlemen. While broader secondary markets on Dalal Street continue to remain sideways to weak, it's the IPO market that shows no signs of letting up. Issues one after the other are lined up to raise funds from retail investors to boost their capex, to tap newer markets, and of course to also get all the advantages of listing. We are now joined by the management of Vikram Solar. The issue opens on August 19th at a price of between 315 to 322 rupees per share. Vikram Solar wants to raise about 2080 crore rupees with a fresh issue of 4.5 crore shares, and of course an offer for sale for 1.74 crore shares. We are joined by the management, CEO Mr. Gyanesh Chaudhary and CFO Mr. Ranjan Kumar Jindal will defend this pricing and tell us what exactly are these proceeds going to be used for. Good afternoon to you, gentlemen. First to you, Mr. Chaudhary. You are putting up two fresh capacities in phase 1 and phase 2 with these IPO proceeds. Tell us, what is the progress report there? When do you see that functional, and what will be the capex post that expansion?
Good afternoon, Shailendra-ji. I hope I'm audible.
Yes, you are, sir.
Thank you for having us on your show. I'm a great follower of your show and believe that this is an important platform to drive the narrative. As far as Vikram Solar is concerned, we are a proud part of a large and growing solar industry with 2 decades of leadership in driving this initiative. Our capex plans are as follows. We are setting up a 6 gigawatt new capacity of solar modules in Gangaikondan, which is near Tuticorin in Tamil Nadu. This will come on stream by end of this fiscal, and cell capacity of 3 gigawatt is coming on stream by September 2026. This is our use of proceeds for the IPO.
Okay, let's get Mr. Jindal into the conversation as well. He's the CFO at Vikram Solar. Mr. Jindal, what is the capacity utilization at this point of time? Of course, about 1365 crore rupees out of 2080 crore rupees will be used for these 2 phases of expansion. What about the rest of the funds? Where are they going to be deployed?
So normally a module manufacturing plant operates at 65 to 70% of efficiency, and we are in line to achieve that. And of the infusion which we discussed, 1500 crores का जो primary issue है, majorly towards the equity infusion for the capex we discussed, and 100 towards about 100 towards the general corpus.
Okay, fair point. Mr. Chaudhary, who are the sellers for this 579 crore OFS, which is for 1.74 crore shares? And what will be the final stake of the existing promoters after this dilution of 2080 crores?
So the primary, large part of the OFS is being offered by my brother, who is a part of the promoter group.
Okay. Okay, fine. We've also seen, Mr. Chaudhary, over the last 3 or 4 years, there is an appreciable declining trend in the price of solar modules because a lot of companies have got into this business. Can you, for our viewers, paint a picture of the competitive intensity in the solar module business at this point of time in India? How have prices moved over the last 18 months or so, and where are they headed?
So before COVID, the scenario was quite different, and after COVID, we have seen phenomenal support in terms of policy initiatives by the government. The solar industry in general is volatile to the point of availability and access to raw materials like polysilicon, wafer, etc. Indian ecosystem is largely geared for solar panels, but however, a large portion of the cell comes from China and other regions. Going forward, we see a lot of integration and enhancement in these supply chains, and we hope to achieve significant, import substitute based investments coming up in the next few years.
Would you want to comment on how pricing has moved down over the last 18 months, Mr. Chaudhary?
Absolutely. So, if you see the trajectory, solar prices have dropped close to 90% in the last 10-15 years. So, while
Okay.
this may pose as a challenge or a threat to the sector, but on the contrary, what has happened is solar, because of prices becoming affordable, the the access to larger share of the markets have increased, and that has phenomenally scaled up the deployment of solar. Therefore, we are not challenged by prices changing. Now what we see is there's a certain stabilization in pricing over the last 12 to 14 months, and whatever volatility is we see is a natural and a normal demand and supply mismatch that continues to happen, considering that solar projects in India have a gestation period of anything from 6 months to 24 months. Considering there is a lot of development process between land acquisition, STU connection, project development, as well as execution of PPAs. So, in various stages of the projects, we see that the supply demand changes over the years, and then we see at the end of the fiscal a rush to complete projects. So it's purely a function of demand supply, but we see fair amount of stabilization now in price.
Okay. Mr. Jindal, this one comes to you. You have a pricing of between 315 to 322 per share. Post IPO, the PE is still a prohibitive 85, and the earnings per share at 3.87. Would you want to defend what was the logic of keeping the price band at 315, 322, and a PAT margin of just 4%?
Sure. One small correction may be in the data. It's 315 to 332. But nevertheless, this number was an outcome of a proper price
It
discovery
makes your
with
life
the
more
discussions.
difficult.
Exactly. So I should be prepared more. And it was an outcome of the proper book building process with the investors and the merchant bankers. But one small thought process which makes it believe as to why this stock is not pricey and why it's more than reasonable is that the comparison vis-a-vis the PAT of FY25 does not really convey a true picture. It's a valuation of the future cash flows of the company. So FY26 financials that way brings it far, far less than what the peers are being traded today. So over and above being as a role of a CFO, I personally believe that this stock has been priced very well, leaving ample opportunities for the investors to gain. And this is what we want going forward in our journey, that the market in total should enjoy the growth path of the company.
Fair point. Pricing is a nebulous and intangible concept. Most companies feel that they are leaving a lot on the table for new investors, although the markets come up with their own value for a particular stock. Be that as it may, Mr. Jindal, can you please explain to our viewers, there was a 70%, 75% rise in profit after tax for March 2025 over the year ago period, and a 37% rise in top line to 3,460 crore rupees. How did these two numbers happen? What was the reason behind this very steep increase in both profit and top line?
So as we discussed, the country and the company both have enjoyed, in fact, the journey over the solar demand increase, and the customers, most of the customers came back with increased orders. The thrust of the government kept on increasing with pushing more for solar installations. FY24 vis-a-vis FY25, there was a substantial volume jump as well, which made the revenue increase from 2,500 crores to 3,400 crores, thereby correspondingly resulting in the increase in profits as well. As a company, we always try to focus on the costs because selling price is something not entirely in our control. We do have a cost conscious setup entirely, right, starting from the production floor workshop up till the financial management. You could see that the debt of the company as on 31st March 25 was almost come to nil, which has helped us to retain the financial cost also to a very optimum level. That has added substantially for increase in the PAT as
Okay. Mr. Chaudhary, would you want to discuss client concentration? How much of revenue is from top 5 and top 10 clients? What is the order book as of now?
Shailendraji, the order book today stands at 10.2 gigawatt, which more than covers our this year's plan as well as partially next year. And the concentration of client is spread across all the segments that we operate in. Our three key segments that we operate in are the IPP and the large utility segment, then the CNI and distribution segment, CNI and industrial segment, and the third one is the utility distribution segment. Across all the three segments, we have a good penetration, and out of the large IPP projects and customer base, we typically have a 70-80% repeat customer base, and would be close to 70 to 75% top 7, 8.
Okay. Would you translate 10.2 gigawatt into rupees, please, for our viewers?
yeah, as a thumb rule, it effectively is 1.5 crore per megawatt. So the order book of 10.2 gigawatt effectively converts to 15,000 crores.
15,000 crore rupees. Okay. So, Mr. Chaudhary, that you say is good enough for at least one calendar year and maybe a little bit more. So, is it, is that a guidance? Because at the moment the revenue is, say, 3460. And if you continue at 37%, you will get somewhere like, another 1500. So that would be somewhere like 5,000 crores for FY26. Mr. Jindal, do you want to step in? What would be the fair value of revenue for FY27?
It would be best if we refrain from any forward-looking statements.
Okay. Okay, fair point. I just, sort of extended the argument that Mr. Chaudhary provided on 10.2 gigawatt.
What I can say is that considering the trajectory that we have shown in terms of delivery quarter on quarter, we will certainly surpass the last year by significant numbers.
Okay, fair point. Mr. Chaudhary, do you get repeat orders from existing clients? How much of this 10.2 gigawatt is fresh inflow and how much is it from existing customers?
So, considering that NTPC is one of our large customers also, we work with public sector units as well as private large IPPs also. So, typically we would see that out of our overall order book, 50 to 60% would be repeat.
Okay, fair point. Mr. Jindal, obviously because of intense competition, price margins are wafer thin, for the lack of a better word, in the world of solar industry. But EBIT margin of 14.4%, PAT margin of 4.1%. Is this something maintainable in the coming quarters, coming years, or is this at risk but you get higher volumes? How do you explain the conundrum?
See, as you told, as a company grows, and this is what our growth path for the next year and the years to come is. A growing company always gets a benefit of economies of scale. So that is something we need to closely work to have an increased and at least a sustained EBITDA levels. And as I told, we are very cost conscious at all levels, right, starting from the workflow till the finance cost. So we are closely watching all the cost elements, and I'm sure we will be able to deliver more than what we have.
Additionally,
Yes, Mr. Chaudhary.
The addition of domestic content cell and the government's mandate to make it mandatory from next year will certainly add and sustain our EBITDA margins and continue to give us good profitability.
Wonderful. On that very expectant, buoyant, and hopeful note, ladies and gentlemen, we'll just end this discussion. Here's wishing you the very best for the IPO listing, which happens incidentally on a Tuesday, August 26th. Let's hope for a big bang, and all the best from our side to you and your team, gentlemen.
Thank you, Shailendraji. It is also time for Ganesh Chaturthi, so I wish all the viewers
Kya baat hai.
best of wishes.
Right. With that, ladies and gentlemen, we'll thank Mr. Chaudhary and Mr. Jindal. Have a good day, gentlemen, and all the good luck to you.
Thank you.
Thank you very much. Thank you.
This was the discussion on the forthcoming IPO of Vikram Solar. The company is raising 2,080 crore rupees at a price band of 315 to 332 per share. The money is going to be raised for capacity expansion, about 1365 crores, and some for general corporate purposes. There is a fresh issue of 4.5 crore shares, and of course an offer for sale for about 1.74 crore shares. All in all, this is what an IPO should be, that you raise fresh funds and put that back in the company to raise capacity and put in fresh plants. Let's hope the listing happens in bright sunshine and in good faith as far as new shareholders are concerned. Thank you for watching. We'll be back at about in the next 2-3 minutes for the last half an hour wheel on the markets. Thank you for watching.
The countdown to India at 100 begins. Business Today's landmark special issue is here. Spotlighting the economic architects shaping our nation's future. Finance, rules, reforms, disinvestment.